Everyone, today is February 9th, 2026. I'm actually a little bit late to this session. We're about 7 minutes late, but nonetheless, we are still here. Again, peeping the same three asset classes that we're always looking at. We're looking at US 30, we're looking at NASDAQ, and we're looking at gold. If we look at the US 30, for one, looking at our news sentiment, we don't have any news for today. For two, if we look at our sentiment for US 30, give me 1 second, it's loading. US 30 sentiment has come out as bearish for today, so we can most likely look for downwards price action, especially since we know that we had this huge exhaustion and its huge bullish rally to the upside on Friday during NFP. Today is probably going to be some form of a correction day, and so we'll continue to monitor this and see if any opportunities present itself there. We then have NASDAQ sentiment, 1 second, has come out. It's also come out as bearish for today. So again, NASDAQ didn't do the same thing US 30 did. We did still have this rally on Friday. It wasn't as aggressive, or Thursday going into Friday. It wasn't as aggressive as what US 30 was, but nonetheless, again, we still did have that rally. Only thing I am looking at with NQ is that the fact that we had a low of the day here that was set in the market at 440, and we have now broken this low of the day to the downside. So with this break of structure to the downside, this is going to either continue to consolidate and then form downward price action to respect the sentiment that came out for today, or we're going to have some form of revert where price, again, this will be the stab of liquidity for today, and then there's a potential for us to see price start to rally bullish, and we can look for some form of bullish price action up to this high of the day, if that's what the sentiment wants to do for today. But that is basically all we're looking at right now for US 30 and for NASDAQ. And then finally we have gold, and gold sentiment for today has come out as bullish. We knew that, again, looking at gold from last week, we had this bullish price action from last Monday. Again, price had rallied on Monday and Tuesday. Wednesday and Thursday had fallen, and then we seen NFP on Friday give us, again, this huge expansion, which has now brought us close to this previous high of the week. So realistically speaking, we would be expecting that this high of the week is going to be the first objective to most likely be taken out, since this is a higher time frame liquidity pool. And so again, we'll wait to see if any opportunities present itself on this as well. But currently, again, we're just in this stagnant price range. I believe that is everything that we are currently looking at. But again, I'll keep you guys updated throughout the session. Okay, so I've taken an entry here. Basically, what I'm looking at is the fact that if we go on a 5-minute time frame and we look at New York Open, we have this 8:30 open here that was extremely bullish. After this 8:30 open, we created this 5-minute fair value gap that price tried to stab back into, but ultimately we missed that stab into the fair value gap. So I went down to a lower time frame, being the 3-minute, and I seen here on a 3-minute time frame, we had a 3-minute fair value gap that was set up at 8:30 that price had come back to and respected here. Once we respected this and we started trading away from it, we had this, again, bullish candle at 8:42, which was an impulse momentum candle. And so from there, I just went on a 1-minute time frame and have aligned an entry on the 1 minute. So with the 1 minute, again, if we hide everything on the screen, we can see that here at 8:31, we had this impulse candle. We pulled back into that impulse candle at 8:36. We accumulated inside of this price action. And then we again created this new impulse candle at 8:42. After that new impulse candle was created, I have now just taken the entry at the fair value gap of that impulse candle. Again, same premise as always. Our stop loss is below structure, which is just below, again, the structure that has created this first impulse. And then our take profit is going to be the high because, as I explained pre-market, our first objective for the week on gold should be this previous high of the week, given how close we are in the market to it. That's basically the premise of what I'm looking at right now. And again, this should either get out of this trade and start momentum, and momentum should start going towards our TP pretty quickly, or we know we're going to either consolidate and drop off or just consolidate for the session. But that is currently all that I'm looking at. Again, just monitoring this price. We don't want to see any breaks to the downside, because once this fair value gap is broken, we know that we would be in invalid pricing, and price would be able to then flip from there. But currently structure is holding up, and so again, we'll just sit on our hands and wait to see what happens in this setup. Okay, so update on this trade. Again, trade's moving very well. Currently about 1% is what this high is going to run. Once we run this high, I'm going to move my stop to break even because it is 854. And we do know that, again, 9 o'clock price action, we have no idea what that 9 o'clock candle is going to open as and what it's going to do. So we're waiting for this to be ran currently. And then once this is run, we're just going to move our stops to break even so that we can mitigate risk as a whole for today. Okay, so stops are now moved to break even. Again, we've now ran this high that we were talking about. So we now have no risk on the table. And now we're literally just waiting for this to distribute to these highs. Again, it's about 4 points. It's 856 currently. We know 9 o'clock should bring some form of momentum into pricing. Again, just for technical sake, especially since... Oh, I didn't even know I could do that. But yeah, just for technical sake, if you were to be in multiple entries here, so let's say that instead of being in one position, I was in 2 or 3 positions during this trade. This would be the point in the trade where I would take something off, meaning I would just collect some form of profits because we have now ran the first objective of the trade, which is now 1%. So at that 1%, again, I would have taken either 1 contract or 2 contracts off, whatever it is that aligns with your trading plan. But you know that at these significant swing highs, at these places where price is holding liquidity, you know that you should be taking some form of profits so that you're not just leaving things running on the table. Again, the contrary to that is exactly what we're doing today, which is the fact that we can't take profits on one lot. If we take out one lot, we're going to be out of the trade completely. So instead of doing that, we just move our stops to break even, again, to mitigate that risk and make sure that even if price wants to deliver back to the downside here, let's say price wants to break through this fair value gap, because realistically speaking, this is the last place in price that price should be able to hold in order to impulse us back to these highs with how we look at price action. So let's say that this wants to get disrespected and this wants to get traded right through. Well, we'll get stopped out above our entry and we won't lose any money for today. But yes, that's basically what I talk about when I say make sure that you're managing your risk. Make sure that you're taking profits at specific places that you're supposed to be taking profit at. Because again, you know how price works, and you know that price isn't guaranteed to give you anything. Okay. So another little update in price. Basically what we're looking at, this is what I call walking a dog through price, which is basically all we're looking at now. We are already placed inside of the entry where we want to be. We already know where our targets are defined in the market. Again, I don't know if you've seen on a 1 hour perspective, or not on a 1 hour, on a 5 minute perspective, when we look to the left, there's 5 minute liquidity resting on this left hand side. But we know that price has been making impulses to the upside, and it's failing to reach into these higher time frame objectives. And so here we might get stopped out at break even because, again, from a 5 minute perspective, we know that price has no volume looking to go to the upside. Here should be our stop out here. With our stop limit if we're pulling into it, but we will see what happens in price here. Okay, and that's going to conclude today. So again, price ran, price rallied up to that 1%, and then we seen price just revert back and stop us out here. Again, we lose nothing on today. We move stops to break even for that reason. This is another prime example as to why, again, if you're in multiple positions and you reach your one-to-one or you reach into those higher time frame liquidity pools, you need to be taking profits because, again, it's Monday, it's a low liquidity day, and we understand that where we are in price, we need to be executing at high precision. Looking at this from a 5-minute time frame, again, 5-minute is stuck. The 5-minute has not given you any indication that it wants to go in any direction, given that it is in this consolidation profile. The 3-minute is still holding, but that's why we move our stops to break even because, again, we didn't want to see this 3-minute fair value gap disrespected. And we now see that the 9 o'clock candle closed right below the 3-minute fair value gap. And then we also had a sweep to the downside before now pulling back with this 1-minute time frame candle. So ultimately, again, we'll see what this wants to do for the rest of this session. But that's all that I'm taking for today. And I'll save my liquidity and come back tomorrow to see if any better opportunities present themselves on Tuesday and Wednesday.